Hi there, welcome back to my channel Training Express. Today is session number 11. But before we talk about today's session, let's have a look at the answer to last session's question.
Question was debit balance of each GL account moves to debit column and credit balance of each GL account moves to credit column in trial balance. Is it true or false? Answer is true.
Okay, welcome back. Today is session number 11 and we will continue our discussion of the accounting cycle. Today we will be learning the concept of accrual in detail and we will learn how we can make adjusting entries for accrued revenue and accrued expenses. In addition, we will learn how we can prepare adjusted trial balance and worksheet based upon those adjusting entries. So let's have a look at session number 11.
Today we are going to talk about step number 5 and step number 6. We will learn how we can make adjusting entries or adjustments, and then based upon those adjusting entries, how we can prepare our worksheet. Okay, let's talk about today's topic, adjustments or adjusting journal entries, part 1. Before we talk about the adjusting process in detail, let's first have a look at what is an adjustment and why do we need it. A transaction can affect only one accounting period or more than one accounting period. When a transaction affects more than one accounting period, then we need to adjust certain accounts. This process of adjusting different accounts is called adjustments. As accounts are adjusted through a journal entry, so the adjustments are called adjusting journal entries. Now let's start our today's topic, and we will start with what types of adjustments we can or we do make generally. If you look at the left side, we have got accruals. When we talk about accruals adjustment, we will be generally talking about two types of accruals. One is accrued revenue and the second one is accrued expenses. Then if you look in the middle, the second type of adjustment is deferrals or prepayments. Under this type of adjustment, we normally make three adjustments: unearned revenue, prepaid expenses, and supplies. And then on the right side, you will see another type of adjustment, which is called depreciation. Today, we will talk about only accruals, and in the next session, we will talk about deferrals or prepayments and depreciation. Let's look at accounting basis. There are generally two accounting bases used to record business transactions: cash basis and accrual basis. Let's look at cash basis first. Cash basis of accounting records a revenue and expense transaction only when cash is either received or paid. Let's look at accrual basis. Accrual basis of accounting records a revenue and expense transaction when the transaction occurs. In other words, in accrual basis, we do not wait for the cash receipts or cash payments. We record transaction as soon as it occurs irrespective of cash receipt or cash payment. Now we are going to discuss the adjusting entries related to accruals. When we talk about accruals, we talk about two types of adjusting entries. One is accrued revenue and the other one is accrued expenses. Let's talk about accrued revenue. Accrued revenue means that revenue has been earned but not yet received. It means that we will record this revenue as receivable. Let's look at an example of accrued revenue. Let's assume that we have $10,000 in our savings account on January 31, 2020, and bank pays interest at the rate of 10% per annum. Bank's policy is to pay the interest on a quarterly basis. How much interest income can we accrue on January 31? Explanation. As the month of January has passed, so we have earned an interest equal to 1 month. Here is the calculation. $10,000 is our bank balance. We will multiply by 10% and we will get $1,000. But this $1,000 is for the whole year. Now we need to accrue for only 1 month, which is January 2020. So what we will do, we will take $1,000 and we will divide it by 12 months and we will get an amount of 83.33. Now we will record this earned income in the form of journal entry. Because we have not received this interest so far, so we will record it as interest receivable. Because it is a receivable, it will be treated as an asset. And assets, whenever increase, we debit. So interest receivable will be debited by 83.33 and interest revenue will be credited by 83.33. So this is the first adjusting entry which we are going to record in our books. Let's look at another example of accrued revenue. Let's assume that we have provided services to our customers in the month of January for $15,000 on account. Customers have agreed to pay the outstanding balance after 6 months. Explanation. As we have already performed the services, so we have earned revenue in the amount of $15,000. Now we will record the revenue as receivable. Let's make the adjusting journal entry here. Accounts receivable will be debited by $15,000 and service revenue will be credited by $15,000. In the previous two examples, we talked about revenue. Now let's look at how can we earn revenue, or what are the different types of revenue. Revenue can be earned by selling goods. This is one option, that we sell goods, we deliver them to the customer. When we have sold and delivered goods to the customer, we can say that we have earned revenue. Remember, it does not matter whether we have received cash or not, because we are following the accrual basis of accounting. Second type of revenue, or the way we can earn revenue, is through performance of services. Whenever we have performed services, we earn revenue. Again, it does not matter whether we have received cash or not. If we have performed services, we have earned revenue. Another type, you can see, it might be interest income, it might be rental income. There are other types of revenue as well, but here we are focusing only on the general types of revenue. After discussing the types of revenue, now we can look at forms of revenue. Revenue can be earned in the form of cash, which means it is a cash transaction. It can also be earned in the form of accounts receivable, which means it is a credit transaction. Or sometimes we can earn in the form of cash as well as accounts receivable, which means that it is a combination of cash and credit transaction. Having discussed the concept of accrued revenue, now let's talk about accrued expenses. Accrued expense means that expense has been incurred but not yet paid. It means that we will record this expense as payable. Now let's look at our first example of accrued expense. Let's assume that employees work from Monday to Friday and they are paid $500 on a weekly basis every Friday. Let's assume that last payment was on January 26, which was Friday. How much salaries expense we need to accrue on January 31? Please look at this calendar. Employees work from Monday to Friday, which means 5 days a week. It simply means that Saturday and Sunday is off or it is holiday. And they are also paid on Friday. Now you will see from January 1 to January 5, they worked for 5 days and they were paid on Friday, 5th of January. Then in the next week, they worked from 8th of January till 12th of January and they were paid on Friday, 12th of January. Third week, they worked from 15th of January to 19th of January and they were paid on Friday, 19th of January. Week number 4, they worked from 22nd of January to 26th of January and they were paid on Friday, 26th of January. 27 and 28 is a holiday. And now we are ending our month of January on January 31, which is a Wednesday. But they will be paid on Friday, 2nd of February. Now if we have to record this transaction or the expense accrual on January 31, how can we record it? Try to note that in the last week, employees have worked on Monday, 29th of January, Tuesday, 30th of January, and Wednesday, 31st of January. Till January 31, employees have performed services for 3 days. So, we will record salaries expense for 3 days only. And because we have not paid these salaries so far, so we will record it as salaries payable. Continuing with the same example, look at the explanation. Employees have worked from January 29 to January 31, 3 days. So the salaries expense of these 3 days should be accrued in the books. Now let's calculate weekly salaries, $500 for 5 days. Daily salaries, $500 divided by 5 is equal to $100. And because employees have worked for 3 days, so we will multiply 3 by $100. So our salaries expense accrual will be $300. Now let's record this in the form of a journal entry. Salaries expense will be debit by $300 and salaries payable will be credit by $300. Okay, so now let's look at our second example of accrued expense. Let's assume that we have got a bank loan of $25,000 at the rate of 5% per annum. Interest payable is due on a quarterly basis, which means every 3 months. On January 31, we need to make an interest accrual. Explanation: $25,000 is our bank loan and the annual interest rate is 5%, which is $1,250. Now this $1,250 is for the whole year, and here we need only for 1 month, for January 2020. So we will take $1,250 and divide it by 12 months. So our monthly interest will be 104.17. As this is an expense, so we need to record this as an expense. So let's record it in the form of a journal entry. Interest expense will be debit by 104.17 and interest payable will be credit by 104.17. Remember, we are recording it as payable because actually we will pay this interest after 3 months. Now let's look at our original trial balance from the previous session. We have called this trial balance as unadjusted. The reason is that in this trial balance we have not shown any adjustments so far. And you can see we just copied it from the previous session. Now this is the time to prepare our worksheet. Let's look at the first column on the left, trial balance, unadjusted. In this unadjusted trial balance, we have got some accounts highlighted in green color. Most of these accounts, they are added as a result of adjusting entries, except accounts receivable and service revenue, which was available even before adjustments. Now look at the adjustment column, second column here. And here you will see that all the adjusting entries are being shown over here. You can see accounts receivable debit $15,000, service revenue credit $15,000. Then you can see interest receivable debit 83, interest revenue credit 83. Salaries expense debit 300, salaries payable credit 300. Interest expense debit 104 and interest payable credit 104. And at the bottom you will see that debit column is exactly equal to credit column. Now let's look at the last column, adjusted trial balance. So what we will do here, we will show the effect of adjustments on the relevant accounts. Cash has no adjustment, so it will be carried as it is, $6,000 debit balance. Accounts receivable, original balance was 5,000, which is a debit balance. So now we are adding another debit of 15,000, so the total will be $20,000. Computer, furniture and fixtures, accounts payable, Stacy's capital, and Stacy's withdrawals. There is no adjustment for these accounts, so their balances will be shown as it is. Service revenue has got an adjustment. You can see the unadjusted balance was $7,700, and now there is another credit of $15,000, so we will add them together to $22,700. Rent and advertising expense has no adjusting entry, so we will leave them as it is, and we will take their balance of $1,000 and $250 respectively. The last few accounts have got adjustments, so we will be taking them in the adjusting trial balance as it is. You can see interest receivable debit 83, so you will see there 83. Interest revenue credit 83, and you will see 83 in the credit column. And so is the case with salaries expense, salaries payable, interest expense, and interest payable. Now when we look at the total of the adjusted trial balance, the total on the debit side is $31,988, and total on the credit side is $31,988. So this is the optional worksheet step which we can prepare once we have made the adjusting journal entries. At the end of this session, let me ask you a simple question. If rent expense is due for payment in the amount of $500 but has not yet been paid, what would be the adjusting entry for this expense?
So this is the end of today's session. Let's have a look at what we have learned today. Today we learned how we can record adjusting entries for accrued revenue and accrued expenses. In addition, we learned how we can prepare worksheet and adjusted trial balance. I hope you liked today's session. Please stay tuned for more accounting sessions and don't forget to subscribe to my channel. Thanks for watching.